Hims just reported Q1 earnings. Revenue up 4%. A $92 million net loss. The market sold off. This is a story of short-term pain and long-term gain. The pain is real, and it was deliberate. CEO Andrew Dudum said on the call, "I have never been more confident that we are building the future of health." Here is what happened and why we think management made the right call.
Q1 2026 revenue, $608 million, up 4% year over year. Q1 2025 was plus 111%, driven by compounded semaglutide. GLP-1s are a class of weight loss drugs that work by suppressing appetite. Semaglutide is the active ingredient in Wegovy and Ozempic. When branded Wegovy faced a shortage, regulators temporarily allowed pharmacies to manufacture their own version. Hims took advantage of that window and produced it in-house at high margins. The shortage ended. Branded Wegovy and Zepbound returned to pharmacy shelves. In March 2026, Hims stopped advertising compounded GLP-1 and began distributing the branded drugs instead. This created a gap between stopping the old product and ramping the new one. The plus 4% growth rate reflects that gap. Management described the decision as deliberate. Whether it improves the business depends on how quickly branded GLP-1 subscribers ramp and retain. The Q1 numbers do not yet show that. Within 6 weeks of launching Wegovy, Hims fulfilled more than 125,000 shipments. They are on track to add over 100,000 new weight loss subscribers per month. CEO Andrew Dudum said on the earnings call, "Demand is near record levels, even beyond the demand we saw following this year's New Year's and Super Bowl campaigns." Engagement data from the first month, nearly 90% of new subscribers downloaded the app, and the average subscriber interacted with a provider 3 times. Management provided no retention data beyond the first month. These are early-stage figures. Retention over multiple months has not been disclosed. Net loss, $92 million, a swing of $141 million from a $49 million profit in Q1 2025. 3 items made up most of the loss. A $33.5 million restructuring charge, the cost of shutting down the compounded GLP-1 supply chain that is no longer needed. A $15 million legal reserve set aside for a dispute with the FTC, the U.S. Federal Trade Commission, the government agency that regulates business practices, and $27 million in non-cash accounting charges, paper losses from accounting adjustments, not actual cash spent. Management characterized all 3 as one-time or non-cash items. Gross margin, the percentage of revenue left after the direct cost of delivering the product, fell from 73% in Q1 2025 to 65% in Q1 2026. Management noted that $28 million of the restructuring charge was recorded directly against gross margin. Excluding that charge, gross margin was approximately 70%. Management said the profit earned per customer on branded GLP-1 is roughly similar to what it was on compounded GLP-1, though this has not been independently verified. Operating cash flow was $89 million. This is the actual cash the business generated from its day-to-day operations after paying its bills, separate from the accounting net loss figure. The operating cash flow margin was approximately 15%, down from 19% in Q1 2025. The CFO said on the earnings call, "While we expect to be positioned to return to net income profitability in 2027, our primary focus will be on driving strong growth and cash flow generation." In plain terms, the company expects to return to reporting a profit on paper by 2027, but for now the focus is on growth and cash generation. Under the old pharmacy-made GLP-1 model, customers shipped every 2 months. Under branded Wegovy, it is every month. That shift has a mechanical effect on revenue. New subscribers acquired in each month continue paying the following month. As monthly additions stack, each group of new subscribers, referred to as a cohort, adds to the revenue base built by the previous month's group. The CFO said this is expected to result in accelerating revenue and operating profit growth in the second half of the year, Q3 and Q4. This is management's projection, not a guaranteed outcome. It depends on subscribers continuing to pay month after month as the branded product scales. Separately, marketing spend was concentrated in the first half of the year. Marketing as a percentage of revenue improved 3 points year over year and quarter over quarter to 36%.
Subscribers, 2.6 million, up 9% year over year. The subscriber base has grown from just over 1 million in Q4 2022 to 2.6 million today. Q1 2026 added around 100,000 net subscribers in one quarter, driven by the Wegovy launch. Management's thesis is that subscriber data is a long-term competitive advantage. Each subscriber's intake form, treatment history, provider decisions, and health outcomes feed into a single platform. The larger the subscriber base, the more data the platform accumulates to improve future care decisions. CTO Mo El-Shinawi joined the earnings call. Dudum said El-Shinawi will participate every quarter going forward. El-Shinawi described it this way: "We are one of the only platforms in healthcare where consumer intake and diagnosis, treatment journey, provider decisions, and eventual outcomes all live in a single stack, meaning one unified system that handles everything from sign-up to treatment outcome, end to end." El-Shinawi added, "This is the highest quality label in AI any company can hope for, and it cannot be acquired. In AI terms, a label is the real-world data used to train a system. HIMSS patient outcomes are that training data, built one patient at a time. HIMSS has been operating since 2017. Whether the accumulated data constitutes a durable competitive advantage, one that is difficult for competitors to replicate, depends on how other companies build their own data sets over time." Monthly revenue per subscriber, down from $83 in Q4 2025 to $80 in Q1 2026. Monthly revenue per subscriber peaked at $84 in Q1 2025, when high-margin compounded GLP-1 was at its peak. It has declined since. Q1 2026 is $80. Management's plan to grow this metric involves adding more services per subscriber. Labs AI is HIMSS' tool that analyzes blood test results and flags insights for subscribers. Your Bio is an at-home blood draw device that HIMSS acquired, allowing subscribers to run blood tests without visiting a clinic. HIMSS is also integrating data from wearable devices and expanding into additional health specialties.
On testosterone treatment, management reported that 95% of subscribers saw testosterone levels increase within 2 months, managed entirely through at-home testing and provider adjustments, no clinic visit required. No equivalent outcome data was disclosed for other specialties. Whether additional services will materially lift revenue per subscriber has not yet been demonstrated at scale. International revenue, $78 million in Q1 2026. 1 year ago, $7.3 million. Zava, a European digital health and telehealth provider, operates in Europe. Livewell, a Canadian telehealth platform, operates in Canada. Eucalyptus, an Australian digital health company with operations across Australia, the UK, Germany, Japan, and Canada, is a pending acquisition that has not yet closed. The international businesses already operate on the branded pharma model. The transition pain in Q1 is largely a U.S. story. International expansion is ongoing. The Eucalyptus acquisition has not yet closed. Management is positioning HIMSS as a distribution platform for healthcare products and services beyond telehealth. In the Q&A, Dudum said, "Pharma, biotech, devices, advanced diagnostic testing, All of this innovation ultimately needs distribution. Our ability to have the largest geographic footprint and the deepest relationships with consumers as the major front door is an incredibly powerful component we can bring to these partners. 3 pharma partnerships are already live on the platform. Grail, a biotechnology company focused on early cancer detection through blood tests, is live. Novo Nordisk, the Danish pharmaceutical company that makes Wegovy, is live. Eli Lilly, the U.S. pharmaceutical company that makes Zepbound, is live. Management said there are currently around 24 active conversations with other pharma and biotech companies. On peptides, small proteins used for muscle recovery, anti-aging, and hormone support, Hims owns a U.S.-based peptide manufacturing facility and over 1 million square feet of FDA-licensed compounding infrastructure. FDA clarification on peptide regulation is expected in July 2026. Dudum said on the call, "We likely will not be first to market. But when we do, we'll make sure that we feel like we've got everything done the right way." 4 metrics were absent from this earnings report. First, how many subscribers use more than one Hims service? Management said existing subscribers are adding services on their own, but provided no numbers. Second, labs usage. No data on how many subscribers are using the labs AI tool, how many tests have been run, or how many continue using it over time. Third, Your Bio launch date. The acquisition of the company closed, but no date was given for when consumers can actually use the at-home blood draw device. Fourth, the cost of running each blood test and whether Hims plans to bring testing operations in-house to reduce those costs. No figures or timeline were given. These are the data points to look for in Q2. Q1 2026 was the most painful quarter of this transition. The gap between stopping compounded GLP-1 and fully ramping branded Wegovy hit revenue, margins, and the bottom line all at once. We agree with management's strategy. This is short-term pain for long-term platform gain. Full-year revenue guidance raised to $2.8 to $3.0 billion. Q2 guided at $680 to $700 million, which is 3 to 6% above what Wall Street analysts were expecting. Operating cash flow of $89 million shows the business engine is running. The data flywheel is compounding with every new subscriber. The platform is building for the long term. As Dudum said, 2026 is proving to be a year of accelerating growth. The subscribers are the asset. The data is the moat. The platform compounds with every new customer. One last thing. The content in this video is for reference only and does not constitute investment advice. All investments carry risk. Please make your own judgment based on your personal circumstances.